Good afternoon and welcome to the latest issue of Print21, the weekly video news bulletin for the Australia and New Zealand print industries. We're back after the holiday break as the nation and the print industry swings into gear for what will be a big year. This issue sponsored by Ball & Doggett, Australia's largest supplier of printable materials and press room consumables, and now supplying wide format equipment. The board at AAB has made Mark Atkinson the new CEO at print powerhouse Pegasus Media and Logistics, succeeding Kevin Slavin, who is now retired, as is Harry Dingle, who was the company's CFO. Atkinson joined Pegasus last June as General Manager of Operations, coming from Avato and with a 27-year track record in print, including a stint at Maps, which was bought by AAB, the Pegasus owner, some 20 years ago. In addition to his role at Avato, Atkinson has also worked in senior roles at Rotary Offset Press, Williams Lee, Offset Alpine Griffin Press and PMP. Frank Shapter has joined the business as Chief Financial Officer, responsible for all finance and administration areas of the business. The changes at the top follow the completion of the consolidation of the manufacturing sites into Blacktown and the establishment of the new warehouse at North St Mary's. That was late last year. They also follow the departure of General Manager Michael Schultz in November. He's now a consultant up in Queensland. He was in the role at Pegasus for 18 months and prior to that spent 30 years with SOS before its acquisition by Pegasus, heading operations and sales. But once consolidation was complete, the Pegasus role essentially became redundant. Also leaving at the end of the year was Pegasus sales manager Ross Muirhead, who is now state sales manager for QLM label makers. Slavin had been in the role at Pegasus since May 2022. He succeeded longtime CEO Wayne Finkeldy and joined after leading Avato as CEO through 4 turbulent years. Prior to that, he was CEO at IPMG before the merger with PMP, also for 4 years. However, after just 18 months at Pegasus, he's gone. With sales of 80 million at the last accounts, Pegasus is in the top tier of independent Australian print businesses, 200 staff now consolidated into its Blacktown site, which has 4 offset presses, including a pair of 10-colour B1s and a massive Roland 806 used for display work. It also has a suite of wide format and digital print systems. 2 supplier businesses in the sign and display world have hit the skids, with All Flags Signs and Banners and Starleaton. Peter Wagner's West Australia-based All Flags business, though, are now out of voluntary administration, back up and running under new owners. It looks though like unsecured creditors of the former business will be hard pushed to see any of their money, with the ATO first in line and owed a substantial sum running into many millions. Wagner is now general manager of the business he founded 30 years ago, with 2 of his sons now owning 25% of the company between them. Starleaton, meanwhile, another national family-owned supplier with facilities around the country, is looking for a buyer, as it too is in voluntary administration. Managing Director Ben Eaton, son of the founder Peter Eaton, has stepped down from his role as Acting President of Suppliers Association Visual Connections in order to focus on the Starleaton business. Visual Connections says large parts of the industry are still dealing with the flow-on effects of the COVID period. The administrators at Starleaton will hold first creditors meeting on the last day of the month, 31 January. While the wide format sector has grown exponentially over the past 20 years, Starleaton operates in an increasingly competitive landscape, which in recent years has seen the 2 big national paper merchants, Ball & Doggett and Spices, enter that supplies market in both consumables and in hardware. In addition, there are half a dozen strong players competing in the same space, including the likes of Graphic Art Mart, Ricky Richards, Hexis, HVG, Kissel & Wolf, Orifol and Spandex. And virtually all the equipment manufacturers also supply consumables, which is, of course, is all great news for printers, but a tough market for suppliers. Print21 is outside the Canva offices today because staff and shareholders at the online graphic design juggernaut are set to share a $2.3 billion windfall, with a secondary share offering imminent, that's according to Bloomberg. The sale of the shares in the 11-year-old business, which was started by 3 friends in Melbourne, Melanie Perkins, her husband, Cliff Obrecht and Cameron Adams, means it would be valued at $26 billion, with a secondary offer preceding its IPO. That's expected in the next year or 2. Canva will be one of the highest secondary events in the history of global technology companies. Secondary share deals, of course, enable existing shareholders to sell their shares, which until the IPO, when the company goes public, are largely illiquid. Reports suggest a whole suite of blue chip investors are lining up to buy the shares. None will likely see the same return as Blackbird, the fund which invested $3 million in Canva a decade ago, an investment which today is now worth $1 billion. Canva has annualized revenues now of $2 billion, which according to Bloomberg means it's growing faster than any public software business in the world. It now has some $170 million users every month, and reports suggest it added more new users in the past year than in the previous 9 years combined. That's it for this week's issue of Play Print21. Go to print21.com.au for all these stories in depth and more. Thanks to our sponsor Ball & Doggett. This is Wayne Robinson outside the Canva offices in Australia, editor of Print21, signing off for another week.